Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Hey, we know that the PPI numbers came out today, the Producers Price Index. In the pre-markets, it sent the Dow falling 300 points. Before I get started, my name is Larry Jones. For those of you that are new to the page, go ahead and hit the like, subscribe, and notification bell. And if you want some free stuff, some Christmas stuff, click my top link below. Mumu is giving 20 free stocks. You're guaranteed 10 free stocks for a small deposit of $100. Get that funded today. Let's go to the short report and let's discuss it right after that.
Yes, for November on headline Producer Price Index, what we have is up 0.3%. Strip out food and energy, it is up 0.4. That's a bit hotter than expected. And this one's very interesting because up 0.4 on month-over-month core was 0 last month. It was 0. So we have moved higher there. That's significant. And if you strip out food, energy, and trade on a month-over-month basis, expecting up 0.1, it is up 0.3. And in the rearview mirror, 3 out of the last 4 months outside of November were only up 0.2. So heating up there as well. Now, my favorite, the year-over-year numbers. On year-over-year headline or final demand, 7.2 expected, 7.4 is what arrived, and the rearview mirror is 8%, and the high water mark here is 11.7. The high water mark actually across the board for PPI was all March of this year. That one was 11.7. So you could see that we've come down, and 7.4 is the lowest level since that number. And if we go to 6.2 for core year over year, that was expected to be 5.9. So also hotter than expected. But is expectations really what's in the market, or is it where we've been? And the rearview mirror is 6.7. So 6.2 and 9.7 in March, you can see we've made progress, but we're still historically high. And finally, the last year-over-year number, ex-food, ex-energy, ex-trade, expected to be up 4.7, is up 4.9. So the expectations on all numbers, monthly and year-over-year, were all higher than expected, but they were all tame on the year-over-year. So 4.9, how does that stack up? Well, 4.9's high water mark in March was 7.1, and the rearview mirror is 5.4. So we have to watch the market, and we've seen yields move up. A 2-year note yield is right around 4.25. It's moved higher. A 10-year note yield was around 3.46. It's moved higher. But let's consider the facts on a weekly basis. 30-year bonds closed last week at 3.55. They're at 3.47. 10-year notes last week closed at 3.49. They're hovering at 3.50. 2-year notes last week closed at 4.27. They're at 4.29. Those weekly numbers give you a nice glimpse of a week where the Fed speak continued to try previous week push rates higher and equities lower. They were only half successful on the equity side. And of course, we have CPI next week. These numbers will be the capstones before the Fed decides whether they're going to move 0.5%, 50 basis points, which is what the market seems to expect.
As you could see, month over month, everything was high on the PPI, the Producers Price Index. So things are hot. And year over year, a little more tamed, month over month, excluding food and energy. All right. So now, what does PPI do, the Producers Price Index? It gives us a peek into the CPI, which is the Consumer Price Index, right? What does the consumer do? You consume the products that the producers produce, right? So this doesn't necessarily mean that Consumer Price Index, CPI, will be high. It does not necessarily mean that, okay? And so we have to see. And it doesn't necessarily mean or shows what the Fed will do. Though the market did tank by 300 points, it has been fighting its way back all day long. Let's see how closing bell will wind up. It is Friday, all right? And so the 50 basis points is still priced in for the FOMC meeting. Remember, this Tuesday will be CPI numbers, right? CPI numbers will come out this Tuesday, and then Wednesday, the Fed will come out and talk about where he's going to be on the interest rate hikes. The market has priced in 50 basis points. Now, if CPI is hot, then the Fed could go up 75 basis points, which will not be good. NOT, not be good for the market. The market will further tank. And the market actually has had a bad week. This has been a horrible December opening for the month. It just has been not good. Let's pull up a chart here. As we could see, this has not been good. Let's do that. As a matter of fact, let's go a month out. And as we can see, the S&P is not doing good. For the last 5 days, it's down 2 points, which is a lot for a month that is generally a good month. December is generally a good month, so it's not doing good. And so we're going to see. Myself, I am just like I suggested in my last video, just chilling right now. Why run the risk? Because CPI could come high. And if it comes high and you're caught in a swing trade, then it would have been better had you just sat still. In my prior video, I talked about just sitting still and not trying to force the hand of the market. It's just not a good thing to do. All right. And sometimes trading is actually just sitting still and having your money safe, right? Cash is king right now. I don't care what anybody says. Cash is king. You know, there's times when cash is trash. Cash is king right now because we are getting ready for the worst of the recession. We're already in a recession. And for those of you that have been dollar cost averaging, I want to say this, and I failed to say it in my last video. You just continue. Those of us that's doing the $5 a day challenge, we're continuing that. We're not going to end that. And so forgive me if you didn't understand that in the last video, but we continue that. And we're going to continue that for the next 5 years, period. Whether the market is up or whether it's down. We don't know when or where. All we could do is make a plan. And so while we're making a plan on our big spins or our big buy the dips, we're going to continue with small amounts of money to dollar cost average in, good people. All right. I'm sorry. These allergies really got me today. All right. And so I also want to tell you guys again, last time, listen, this week, get the free stuff, good people. Download it, put $100 in there and get guaranteed 10 free stock and have a Merry Christmas and get 20 free stock by deposit and $1,000. And there is where we're cashing up. So come join us, cash up. They're going to ask you some questions and make sure it's you. But tell me what you guys are doing. Are you holding? Are you in the middle of a trade? Remember, you got Monday, and just be careful, all right? Because then the Fed could release what he's going to do prior to him making the announcement. So you don't want to just get caught in a trade. And so right now, today, a lot of you will probably be asking, I'm not playing the TQQQ. I'm not playing the SQQQ because it's just not worth the risk right now. We don't need to make all of the money. Sometimes we just need to sit still, all right? And we don't need to lose any more money. Sometimes trading is just sitting still. Now, if you're in a play, good for you. All right. Let us know how that goes for you. All right. Listen, I want every single person, everyone to watch this video. And it was the video from yesterday, but I want everyone to watch this video. Watch this video, everyone. And if you didn't understand something, go back and watch it again because it is powerful and it's going to help you in your trading journey. All right. Live, love, laugh, and learn. Watch this video, download the links below.